So what is happening is, so here we have time frames. We have 1 minute. I said yesterday we've got 1 minute. Each candlestick here that you see represents 1 minute. 5 minutes. Each candlestick represents 5 minutes. 15 minutes. Each candlestick represents 15 minutes. Like this candlestick, after 15 minutes, you see another one. The last one. After 15 minutes, you're gonna see another one. 30 minutes, 4 hours. After 4 hours, you're gonna see another candlestick. Daily, 1 day. So which means this one from 12 to 12. This one 1 week time frame, which means that it represents weekly from 1 week to another week. Okay, we all good. Let's move. Okay, let's move on. Let's move on. So I can leave it here on 15 time frame or wherever. So this is my demo account, guys. This is my demo account with IC Market. Why am I using IC Market for my demo? I use IC Market for one reason, not for my demo, for my trading. By the way, when I trade with IC Market. Is a broker that is based in Australia. Why I use IC Market is because they're cheap. When you place a trade, there's something that is called a spread. You're gonna see it now. Okay, for instance, let's say I place this trade, the gold. Now I'm gonna go and click. Okay, let me just show you guys. When you place a trade, you go to new order. There's something called new order. You go to new order. Okay. When you are in new order, this is where you place the trade. When you are in new order, you can see the symbol. You can see the symbol. It says XAUSD, which it says comma gold versus US dollar. Okay, gold versus US dollar. Type market execution. When you press here, you can even do the pending order. We'll get there. But let's talk about market execution. The trades that you're gonna place and start running now. The pending order is the trade that you're gonna say, no, I want this trade to start running after when the market reach this price. So that's where that order you wanted to start running. But for now, what's gonna happen is we're gonna be talking about market execution. Market execution, which means is a trade that you execute there and there. So the market, when you open the new order, the market execution is always there. It's always there. You only changes when you do when you're thinking when you want to do the pending order, but the market execution is always there. You don't have to worry about it. The next thing is the volume. Remember, guys, I spoke about the volume. I said the volume is a very important thing. What is the volume? It's the one that I spoke about. I said it depends. The more money you put in, the more money you get out. Right now, the volume is called lot size. Again, just take notes. Volume stroke lot size. Lot size is you write it as like it's LOTS space size. Yeah, SSIZE. Lot size. It's volume. If you don't want to say volume, you say lot size. It's still fine. So that's your volume. The volume is lot size, same as lot size. If you hear me saying lot size or volume is the same thing, okay? So it's 0.20, okay? So it's too big, it's big if you have a small account. This size is big if you have a small account, especially when you're trading gold, because gold moves very fast. You make a lot of money in a small space of time, in a short space of time, and you can also lose a lot of money in a short space of time, okay? So that is gold. So the volume, but the volume, because of the account size that I have is $1,037, which is about 15,000, 15,500. I mean, yeah. So, and there's something called a stop loss. Guys, never place a trade without a stop loss. Okay. I will tell you what the stop loss does. A stop loss, what the stop loss does. A stop loss, it says, okay, I predict that the market's gonna go down. As you see, the gold wants to push down. It says, I predict that the market gonna go down. Yeah? But what if your prediction is wrong? What if the market decides to go the other way? So which means since you wanna sell, I'm gonna show you now the stop loss practically. So this is a stop loss. This is a take profit, guys. This is a take profit. This is where you determine where you wanna take profit, whatever profit that you have made, which means as soon as the market get to this price, I want to take all my profit that I've made. I want to be out of the market. I'm fine. I'm good with that. That's what you say. Okay, so now let us set our thing. Let us place our trade now. We're gonna place this trade of gold. Yeah? It's a market execution, which means we're gonna execute the trade there and there. Okay. So our stop loss gonna be just above because it's gonna be a sell. We are selling gold because the gold is pushing down. We are selling gold, which means as we are selling gold, which means we are buying a US dollar. If you sell another one, automatically you are buying the other one. So we are selling a gold here. So now our stop loss is gonna be here on top. You can see as I move my mouse, you can see as I move my mouse, you can see there, here, there are numbers that are moving here. So my stop loss is gonna be here on top, which means that number 1910.80. That's gonna be my stop loss. 1910.80. Okay, where my take profit is gonna be? Let's say my take profit is gonna be, I want my take profit to be here, or let's say to be here, which means as soon as the market gets here, I take it takes my profits and I'm out of the market. I know this is a small one, this is a short one, but it's fine because my take profit is supposed to be here, but I believe that it's gonna get here before we end the meeting. Okay, so let's say my take profit is gonna be just here because it's just for demonstration. It's 1905.98. That 19.5 is the one that is there, guys, in white. So now what I'm gonna do, because it's a market execution, I'm gonna place the trade. As soon as I place the trade, my trade gonna run down here next to my balance. My trade gonna run down there. As soon as I'm place the trade, you'll see it will start being, it will be red, which means I won't be in profit. It's gonna be on minus. Since it's gonna be on minus, what you call that? We call it a spread. That minus, because all the trades that you're gonna place, they're starting from minus. They start by being on a negative before they move to positive. That amount, we call it a spread. What is a spread? A spread is the money that broker charges you for placing a trade. A broker charges you money for placing a trade. Let me press sell. See, I've placed sell. You see, started from 0.40 here on top, at the bottom. You can see the numbers that are moving down here, guys. If you are still with me,
yes.
Okay.
Yes.
Okay.
Yes, we can see.
Okay, which means we started from minus. It was minus, I mean, 60 cents dollar, 60 cents. Now we're on minus 140 cents. So now as it moves, as now you see now the color is changing. So which means now we are in profits, $1.20, $1.60. We are on profits. So guys, let me talk about this the stop loss, which means now, because I say we are selling. So this dotted line here, the blue one, the dotted line here, it's where we entered. Yeah? Here on top is our stop loss, which means if it happens that it doesn't push down, what's gonna happen? If it goes above here, if it goes, if it pushes up, when it gets here, it's gonna kick us out, which means we're gonna lose. As soon as it goes back, what? It's gonna keep on being on negative, minus, minus, minus. But when it gets here, Lesego, please. Lesego, please. This guy has been asking to be patient with him. I'm sorry, guys, I have to remove him. Huh? Yeah, I had to remove him. Okay, I've removed him. I had to. See, you see now, guys, you see now that the trade now is going against us. You can see here at the bottom that we are on minus 12, minus $11, minus 12. So now the trade is, which means the trade is going against us. but we still predict that the trade gonna push down. So we are not panicking, but as soon as the trade comes here, it's gonna kick us out. It's gonna kick us out. Okay? So which means we're gonna take a loss. How much loss we're gonna take? I can hover my mouse on this line and it will tell me. Okay. Why is not doing it? Yeah. You can see when I hover my mouse over that red line, it's showing me minus $43. So which means that the amount that we're gonna lose if this trade push up and touch that line. If it's trade as you see this gray line, if this gray line comes to this red line, red dotted line, which means the trade gonna kick us out on a minus. As you can see at the bottom here, we are on minus $14. But if the trade goes on our way, how much you gonna make? Let me hold. We're gonna make about $53. Or you can stop. I can just even grab, because you can, if you have a PC, a computer, you can always move this. You can always move it around. You can always move it around. You see? And you can hover on this, hover your mouse on top of this red line. You can see now, if this trade pushes down, we're gonna make $175. How much is $175? It's almost 3,000 rands, South African rands. Are we still together?
Yes, we are.
Yes.
Yeah.
We are on the same path.
Yeah, it's almost 3,000 rand. Yeah. So the man that's gonna make, because you can see that it keeps on changing. So now that is a very important part, guys. That's what you're gonna learn. That's what will delay you from mastering this. You know what's gonna delay you? Is managing your emotions during the trade, because when you trade, your money is in here. So when this thing goes against you, your heart beats fast. Your heart beats fast. Hey, what is trade is doing now? Hey, I don't want to lose this money. I don't want to lose this money. And the most important, the most difficult part is whereby is about managing the trade when you are winning. When you are on profit and there's a pullback on a trade. You know what is a pullback? Let's say now we are here. Let's say we bought from here. The market was pushing up. When the market gets here, it came back. It's selling again while we bought here. When the market came here, it's pushing back. So that's a pullback. It's pulling back. The market is pulling back. So now when the market pulls back, you don't know if it's going to pull back until it takes all the profit that you have made here, or maybe the market is still going to push up. So you don't know. So that's where you must, that's why in my VIP groups, I have books, I have videos that I provide to my students so that they can read in order to manage the emotions during the trade. That is a very important part, because you can analyze the market and be the master in analyzing and do everything. But if you don't know how to manage the trades, if you don't know how to manage your emotions, psychology is very important. From now on, you must be you must be in a position whereby you are friends with motivation. You are friend with motivation. Any motivation book you read, every forex trader reads, guys. We all read. We all read, because there's power. The power is here in your mind. The power is here. The power is here in your mind. If you feed your mind the good stuff, you get the good returns. Okay, I always say that you are what you are today because of what you've been feeding your mind, and you can change who you are by changing what you do, what you feed your mind. What you feed your mind is very important, because what you feed your mind can determine your future as well. So it is important to feed your mind the positive information. So guys, that's how you place the trade. Okay, so you put your stop loss. Never ever place a trade without a stop loss. Okay, because now let's say your stop loss, let me cancel the stop loss. Né? I've moved the stop loss, and let me cancel the take profit. Is fine. I've moved the stop loss. Let's say now you don't have a stop loss. Okay, so if this trade, let's say you place the trade and it doesn't go your direction, it goes against you. Can you see that now it's gonna go against you until you lose all the money that is on the bottom here? Okay, guys, can you take a look on at the bottom at the balance here? Can you see my balance?
Yes.
Can you see the equity?
Yes.
Yes.
When you're placing your
Balance.
trade, yeah, there's balance, there's equity.
Okay.
When you're placing a trade, guys, when you are placing a trade, what's gonna happen is, as you can see that you have a balance, I think of $10,000, especially those who are using Derive. You have a balance. As soon as you place the trade, you see there'll be equity, there'll be margin when the trade is running. Check, guys, the trade is moving. You'll see that there'll be balance. The balance will be still, and the equity will be moving. As you see here, we started with $1,036, but now we are on $1,055, which means the equity is the current price that is taking place in the market. Okay, so meaning it's the money that you have made currently, but this money is not yours until you decide to close the trade. Okay, until you decide to close the trade. Let's say, guys, you were rushing and you managed to place the trade now. Let's say you were rushing, you managed to place a trade on your computer, but you forget to set a stop loss, but you notice that, I forgot to place my stop loss. What you can do is, because I normally do that, guys, I don't want to lie to you. I place the trade like this, I'll just place a trade. Okay, I can just place another trade here. See, I just place another trade. You can place another trade, which means there are 2 trades that are running. Yeah. You can place as many trades as you can. I can place another one. I can place another one. I can place another one. You can place as many trades as you can. You can see these are trades that are running right now. All of them, they are in profits because they are blue, they're in green, they're blue. Yeah. So what you can do is, when you forgot to set a stop loss, you can just hold here, hold it, and drag it back. So now you have set your stop loss. And you can just double click this line, you copy. If you have multiple trades running, you copy your stop loss. Yeah. So which means you're gonna go here in this line. That's when you do it on the what? You see now, guys, we on $50. Yay, we are moving. So that's how you make money, guys. That's how you make money. That's how we download money in the internet. So now, guys, you come here, you double click here in a blank space, and it will show here that there's no stop loss. You right click, you paste your stop loss, double click, you paste your stop loss, double click, you paste your stop loss. Guys, are we together?
Yes.
Yes.
Yes, Mr. D, but I have a question.
Yes.
Who have a question? Who has a question?
Yes, I wanted to ask about the margin and the free margin. I think you haven't explained those ones.
The margin
and the free margin.
And the free margin. Okay. The margin. What is happening with the margin? A margin, because I said there's a balance, there's equity, there's margin, and the margin is the amount that is left. You can place a trade unto this certain amount with the same lot. Is your balance that is left that you can place. You can see, check my margin, it's 381. If I close one trade or two, let me close one trade. Check my margin. It's 305. Let me close another one. Check my margin. 222. Let me close another one. It's 152. Let me close the last one. My margin is 76. So now my margin, what happens is, my margin, as the more trades I place, the more the margin will hit the roof. will keep on growing, will keep on growing until it hit the roof and tells me that you can't place any trades anymore. You are about to blow your account. Are we together?
Yes, yes.
Yeah. A free margin.
Mr.
Yes.
D, can I ask you something?
Yes, sir.
Okay. The trade that you have placed it with the volume of 0.2. Am I right, or
0 is with it 0.20.
the volume?
0.20.
Okay.
Yeah. It's a big,
So
it's a big lot size for gold, guys. It's a big lot size. That's what I normally trade when I trade gold, because I want to make quick money and my account is much bigger. So that's what I normally think place when I place a trade. Guys, we have, can you imagine that we have 5 minutes and we haven't done anything? We have 5 minutes left. If you don't mind, can we have another session after this? I'll send another link in the group.
no problem.
Yes,
Yes.
that's
No
perfect.
Yeah,
No problem.
if you don't mind, can you send another link in the group, because I can feel that because now we're gonna be placed now, because this is how you place a trade, guys. This is how we place a trade. There's no other way of placing a trade. This is how we place a trade. And you can also drag this blue line, you can dotted line, you can drag it if you want your take profit to be here. So which means as soon as the market hit this line, come to this line, the trade will be closed. The trade will be closed. It can continue without you being in the market, because you have set your thingy, your take profit here, which means you have said that you want to take your profit as soon as the market get to this line. Okay. Yeah, guys, I asked you to switch off the mic. Somebody. Ntokozisi, switch off your mic, Baba. Your mic was off. I think it came on when you were talking. Yeah, because there's a movement. So guys, yeah, I'm gonna send a link in the group now, and we're gonna be, because we look at how on placing a trade on the PC. So now we're gonna be focusing on the phone now. How to place a trade on the phone, because some of you are trading with the phone, because there's a slight difference in terms of setting the stop loss, because you cannot just place a trade and set a stop loss after on your phone. Yes, you can, but you don't do, it doesn't give you this advantage of tracking your stop loss, because I can take my stop loss and put it here. Guys, you see this trade is running, isn't it? I'm in profit. So if I want to protect my capital, not to lose anything, I can take my stop loss, drag it, and put it just below where I entered. That is break even. I call it break even, which means gonna be a draw. There's no money that I'll make here. Let me check how much. It's gonna be just $6. That is not money. It's just $6. So we call it a break even. So which means if the market now which means now we are trading with a free money, because your thingy, what do you call this, man? It is English word. Your capital is protected, because the number one strategy that you must learn is to protect your capital. Like in soccer, you make sure that you score goals, but you don't concede. Yeah, don't concede, Baba. Score. In boxing, they say hits. Make sure that they don't hit you back. Like Floyd Mayweather, you always duck. They mustn't get you. They mustn't hit you, because when they hit you, they take the points. So now same thing applies here. Your stop loss was just here. Now the trade moves into profit. You take your stop loss to the break even. Yeah. So if it happens that your market comes against you, there's no money that you're gonna lose. You'll get that maybe $1 or $6. Now it's $8. So yeah, it depends. But yeah, that's what will happen if it happens that the market comes against you. What I just did, it is called trailing a stop loss. You are trailing your stop loss. You trail it. Yeah. So let's say the market, it moves maybe to this direction, to this point here, which means I would have taken my stop loss. I would have taken my stop loss and put it here in the middle, but I can't do that now because the market is not there. You see, I can't do that. I can't do that. So guys, let me just end this one. So this is our trade, guys. It's still running. So now I want us, because this is when we place a trade like this when we are on our PC. That's how we place our trade. Remember, I said we go to a new order. Okay, this is a recap. We go to a new order, and something like this will pop out. Why now? Why it's so slow now? Why it's slow now? Something applies when you're on your phone. Something like this will pop out. Although in your phone is a little bit different. And now, first thing that you check, the symbols is the same thing that you are placing, the same trade that you want to place, and market execution is always there. What is important is the volume. Its volume must be according to the size of your account. If your account is small, you can't trade gold with such a bigger lot size because it won't accept. That order won't be active because your account is too big. It can happen that maybe your account is 2,000 rands and maybe it's 3,000 rand. You place a trade with gold. With one move against you, your account is gone, blown, boom. Yeah, your account is blown. And another thing, the very important thing, you make sure that you set your stop loss. So because you are still new, when we are trading, what I'm gonna do is, because you are still new, we are not able to analyze the chart. For those who are gonna be with me, who will continue to be with me, I will be giving you signals and tell you that this is where you're supposed to buy. Buy here. I'll give you the thingy. I'll give you the thingy, the signal, and say buy at this price. Your stop loss gonna be here, and your take profit is gonna be here. Okay. I'll give you all those details because that's what I do in my VIP group. I give everyone those details, the signal. We call those things signals. We call them signal. Why? Because I'm giving you a signal of the market, which direction the market is going. I'll give you the signal. So if you're part of my VIP group. So guys, let us move further. Then, so now what's gonna happen is, okay, and then after you go and press sell, you don't put any comment, guys. Here, fill policy immediate or cancel. No, forget about those things. Comment, no comment here. Sell, you just press sell. If you are selling, if you are buying, you press buy. Okay, let's check another one quickly. Where we're gonna be buying? Where we're gonna be buying? Quickly. Let's say I know this one is not buying. I'm just guessing again. Now I'm just guessing. I just wanna take a guess. This one look like a buy. Let's buy this one is not a buy, but let's buy USD. Let's say we want to place a trade of a US dollar and the rand. So I use this so that I can have, yeah. Okay, let's say we want to buy here. So what we're gonna do is, you see, is USD and the volume. Let's make our volume 1. Okay. 1 lot size. Hey, that's a big volume, eh? That's a very big one. Hey, let's make it 0.50. This is a very dangerous pair. Eh? It moves very fast as well. Okay. So our stop loss gonna be just below here. Just below here. Okay, our stop loss gonna be just below here, and which means our stop loss gonna be 15.05966, and our take profit, let's say our take profit is going to be just on top here. Just made an example, man. Come on. On top here, it's going to be 515.16874. And then after we are done, the volume is set, your stop loss is set, your take profit is set. Now you can place what? Buy. Okay, you can see the spread here. Minus $17. How much is $17? It's almost 200 and something. Almost 200 and something. You see now, because there are 2 trades that are running, so they are canceling each other. Okay, they are canceling each other. So now we're on $5, $6 profit. They are canceling each other. Why am I saying that? Because if this one push up, go to more negative, it's going to be minus from this amount. So yeah, but you'll understand it as time goes on. Your stop loss is just here, and your take profit is just above here. and we are set to go. Guys, this meeting is recorded. Okay, cool. So guys, what's gonna happen now? I want you to do it on your phone. I'll tell you what to do. Okay, I'll tell you what to do. So which means now you're gonna be out of your Zoom meeting. You're gonna listen and do what I tell you. You're not gonna be watching. Okay, but for those